Hey guys, Mike here. So, oh boy, what a day if you didn't see it. Oh my goodness. I don't think we've had a V-shaped recovery and it seems like quite a while. You might have noticed we had some economic data come out, CPI, wink winky. Didn't look that good, right? Jobs data come in hot, all this good stuff, which we're going to show in just a second. But I will show you down to the penny where this market bounced at and why. But also, we'll listen to Jim Cameron talk about why he's telling you, he's been telling you for about a month now, why you got this crazy bounce today. And plus, we got, a lot of stuff to cover today. But it was shocking. You would think with CPI coming in higher than expected, which I'll show you, that all of a sudden they would say, well, there's no way, March would do rate cuts. But shockingly, man, you might be surprised at what they did this morning with that. And then we'll go into some more rotation. And also, if you're wondering what like the hottest stocks or what Wall Street's favorite stocks are, I'm going to show that to you in this video. And they're pretty easy to find, so I'll show it to you, and you don't have to have any kind of crazy scanners or anything to find these things. But obviously we know jobs data came in lower than expected, which means there wasn't as many people filing claims or continuous claims. Okay, so that's still going strong, even though I know you're screaming at the phone or your computer saying it's a lagging indicator. I know, I've covered that. And then of course when CPI hit, the market goes red immediately because, again, when these numbers get lower and lower, they're harder to hit. So, of course, headline CPI comes in over what they expected month over month. But then you had the headline CPI come in at 3.4 versus 3.2 estimated. Prior was 3.1. Core came in at 3.9 year over year versus 3.8. And so, of course, the market went, oh, my God, and it went straight red. And it sold off for quite a few hours until after lunch. Now, shockingly, you would think at this point in time for March's meeting, they would have said, oh, well, there's no way they're going to do a rate cut now because, trust me, there was Fed presidents out there talking about that. Saying there's no way we can cut now, right? But instead, it went up. It went up from 64% to a 69% chance of a rate cut. And you can see to the right, we've gone from a month ago at 42% chance all the way to 69 now. It keeps increasing. And so that was stunning. I don't really understand that or what they're thinking on that. Again, that meeting is in 45 days, whatever it is. And what was really surprising was the dollar, because the dollar and yields get really affected by CPI. And the dollar, it's holding this trend line, right? But I expected a much bigger pop when this came out today. And initially we got a pop, which of course, stocks sold off. And you can see, could it still come up in that fair value gap and then sell back down? Sure. I think that was a short we talked about a long time ago. But, and the opposite on 10-year yield, it was red. And you can see it's the opposite. Instead of holding the trend line, it's been rejecting off this trend line right here. But I expected this one would definitely be going, green for sure. And it did initially, but then they turned red. And it was like, oh, okay, I guess the bond market knows something. And as you can see, HYG, what's smart money doing? It was green today. Like they're still buying over the last 4 days right there. They've been green when you put it over the SPY. Is there any kind of discrepancy? Are they diverting in any way? Absolutely not. They are still going hand in hand, which if you're a bull, that's what you want to see, is them go hand in hand for sure. No doubt about that. Now, where this market bounced to the penny, and this is where the V-shaped recovery happened, was right here. As I put in the Discord, it was the Nasdaq futures, right? What it hit was the 2021 all-time high level that had broke down to the penny. And when that happened, everything started to bounce. Now, Jim Cameron said this about the flow today and why this bounce happened as well.
So today, particularly interesting, right? We get a bad number and the market kind of tries to sell off. But what happens again? We bounce right back. Why are we bouncing back? January OPEX is the biggest OPEX for single stocks. So all the tech names are strong relative today. Not a surprise based on the flows. This is beach ball underwater activity. This tends to happen until through OPEX, or at least the Wednesday of OPEX the next week.
And you can see this is what we're talking about. This is the Qs actually, but complete V-shaped recovery right there. It's crazy. I don't think we've had one of these for a while now, have we? Because basically the market's been going straight up since November and then consolidating sideways and going down since 2024 hit. But, again, the S&P, we like to keep it in context in this channel. What levels we talk about? 48, 47, and you can see still there. Thought we were going to break out above it when it started to go green in pre-market, but CPI knocked it back down. All right, and then it started to rally back up to that level. And so, again, S&P still has not reached all-time highs. Still within that range. You can see the Qs right there, that trend line. It was when it started to ramp back up and do that V-shaped recovery. bam, like it ran right in that trend line, which you can see has been resistance and support many times going back to January 2023, right there, which some people call that the real bottom, not October 2022. And so, that will be resistance trying to get through this. And you can see the big thing to worry about with the Qs, in tech and everything is, if this starts to sell down, what is that? That's the high, right? That's where it's at an all-time new high right there. So that will be a lower high, right? This level right here, I think that's like 403.16, I believe it is. Watch that level, because if that breaks, that gives you the lower low. That puts you in a downward trending channel. Okay, that's what we got to watch out for. Now, we can plainly see what's happening, which in a way, I guess I feel foolish of saying it, because if the Fed funds tool is trying to say there's going to be a rate cut in March, the Fed presidents are saying, no, that's not going to happen, but it keeps increasing. But I don't know the Fed tool. I don't remember it being wrong so far coming down, maybe once a long time ago, but let me know if you can remember a moment. But, what you see happening, I'm going to show you the chart right here is, I think we all know that if they're going to cut in March, I'd be stunned if they cut in March. I mean, with job market numbers still coming in like they are, even though there's a lagging indicator, and CPI still not coming in where they want it to be. And the biggest fear for them is obviously this being the 1970s and them looking like even bigger fools than they did when they didn't start to raise rates when they're supposed to. You see money doing what? It's flowing to safer areas, right? And you can see it right here. That rotation still is continuing to happen. This is since the sell-off on 29th. As you can see, PSCT, that is small cap tech stocks. KRE, that is regional banks. They are down, right? What's going back up? Right, you got your Magnificent Seven, which really call it the Mag 5 because Tesla is horrible, and there's one other in there that ain't doing very well. XLF, the bigger banks, right? They're safer to be in than a regional bank, right? Real estate's down. It was hot as can be. Why? Because all of a sudden, well, wait a minute, the Fed's not going to cut in all this stuff, and rates are going to stay higher. All this good stuff. Maybe yields start to go sideways instead of going way, way down like they were doing before. That's the kind of stuff you see right there, and that's the problem you're having with IWM right now. Again, it's really just consolidating right here, but the reason why, we'll get into detailed charts on KRE, and we'll get into the small cap tech stocks, on those charts, and show you some key stuff that has to happen, but that's what's holding back IWM. That's why it's selling off after that crazy move up. And when you look, it's setting in this volume gap, right? This is how it moves, and when it gets in the volume gap, that's, I'm surprised it hadn't fallen even harder right now since it's been in there, because when you look at it, and you can see right in that volume gap, that's where you get these very fast moves. You can see it right here and here. This is a daily chart, and these are very fast moves through that area right here. That's why you see that volume gap right there. And so I'm surprised it hasn't fallen down any more than it has, to be honest with you. And you can see on IWM, I mean, hopefully this is where you do get some stability. I mean, you can see some slight bullish divergence on the RSI on the 4-hour right there. We'll see if it can hold or not. I would not be surprised if it continues to drop down until we hit that next support level you saw on that volume gap and everything. But I think what's really holding it up right now is a couple things. One, it is setting a key fib level right there on that golden pocket area. It is setting reacting off that fair value gap over there on the daily. It's having the reaction it's supposed to have. It's not having to pop up because there's still money rotating into the mega caps because they have all the cash. They're safer in case there's not rate cuts. That was the play last year, right? Don't mean they're going to have a big year or anything. But, and then you look at KRE, that's where we're talking about it wedging. Well, what happened today? It fell out of that wedge. It fell down, okay? So it went down more, and you see the regional banks are red as can be. Again, this one's also setting at a key level in the fibs and also setting in a daily fair value gap. And so that's what's been basically holding it up and what it's been reacting off of. And then when you look over here at PSCT, which is the small cap information technology ETF, you can see this basically is wedging as well, right? It has that trend line at the bottom. We bring this down right here. So we got our 3 touches and stuff. And so this one's just basically on a longer-term time frame, setting lower highs and everything as it comes down and just wedges in here. And so we'll have to see if this is going to continue to do that. And it better not come all the way down the other trend line because that's going to be a big drop for it and really hold it back. But we're going to know more on earnings, right? When these small caps start reporting earnings, again, a lot of them have a lot of debt coming due this year, has to be refinanced, all that fun stuff. And, pull up the moving averages. You would think this right here would actually save it because it's almost down to all 3 moving averages right there where you would get a bounce from it. And so we'll see if that happens. But in order for IWM to continue up, Like, you're going to have the small technology companies and your regional banks start to bounce. And as I told members, what worries me about regional banks is that I think it's going to be March 11th, that bank funding program where the Fed was just handing them money and they were handing them doo-doo bonds, right? They were way underwater to get that money, and that's what saved regional banks really from closing more doors. Well, that supposedly is up March 11th. Right before that is what? The Fed meeting. And so if they don't cut rates, on top of, if they actually do, I don't know what the legal law says as far as they can extend that or not, but if that just goes away and regional banks aren't allowed to hand in bonds that are underwater and get more capital because they're still borrowing to this day, what's going to happen to regional banks? You would think they would go down. That would make sense, right? And so let me know what you think down the bottom. I know we got some people out there that love regional banks and they're big into them, so maybe you know. And if you happen to know if that funding program for them is going to get extended or not, also let us know on that one. But it would make sense they would go down, which would be bad for IWM. Now, Tesla, I'm going to start off with this. One, this trend line comes into effect, all right? This is where it bottomed at 103. Obviously, there's that one. So this is going to come into effect as more of a bottoming part, right? It goes right up against that daily fair value gap if the selling off continues. And there's a couple of things that caused this today as well. As you can see, it didn't recover like the other stocks. Well, we talked about the moving average. If it breaks the 200, watch out below. That gap is going to fill, and that's exactly what happened. It didn't fill it to the penny, but it got down to what? 225. That is a key level right there. A lot of people stepped in and started buying right there. But again, this one right here, so that's still going to be open, a little bit of it. Right below that, if it continues, it does have a daily fair value gap up. It does have a daily fair value gap to react off of, and so we'll watch that. You would think people would start to step in, but when you look at this one, I mean, this is just a perfect picture of a stock that just comes down and just been stair-stepping. So it actually took the stairs down the way it took the elevator down, then it started taking the stairs down, right? And so we'll see, because I know a lot of people were talking about 225. They were going to have orders in, ready to go, hitting it as soon as that gap filled. And so maybe Tesla will finally start to get some life in it. But again, watch down below that trend line, that daily fair value gap. Around like I think it's 219 is where that trend line is. Some people are predicting this to go to 200, but I'm going to sit there and say 219 for now because I like to take it one level at a time. Obviously, up above it's going to be major resistance. You'll have the 200, the 50, all those different levels that are broke. Now becomes resistance. And you can see there's a couple things that came out. One, this came out pre-market, right? So Tesla boost pay for U.S. factory workers. That sounds great for the workers. Congratulations. People immediately say, boy, the margins are really going to suck now, right? Because you're raising expenses, once again. The input costs that go into these cars, right? Then the other one that came out in the afternoon was Tesla's going to suspend the production for 2 weeks in the Berlin factory just because of supply constraints and everything from the 29th to the 11th. So that did not help. But I'm not really worried about the news so much as it is the technicals on the chart and everything. So we'll see if 225 holds, okay? Let me know if you got in at 225. A lot of people selling the 210, 205 puts for cash because they think it'll probably pop. And if it does come down below, they'll be able to get Tesla around 195, 197. Now, when you're looking for stocks that Wall Street loves, right? Because what pushes up the market? It ain't us. It's the big money, the hedge funds and all these folks, right? And the pension funds and everything else. Well, when you look on here, what you're really looking for is what stocks are setting new 52-week highs, right? And you can see, and you would agree with all these, NVIDIA, Microsoft, Google, Amazon, Netflix, Salesforce, it's just been a beast. Eli Lilly, MasterCard, Shopify, we talked about too, CrowdStrike, Visa, Elf Beauty, we knew has been on fire like crazy. And then you go down this list and you probably own some of these stocks. And so these are just setting new 52-week highs. And it's not that these stocks have just set new 52-week highs, right? They set them, they come down, and they set a new 52-week high, and they've just continuously done it, right? And so those are the stocks you want to look for. And you start to see stocks on list kind of say, oh, this just hit a new 52-week high. And you go, oh, and people say, oh, got to sell it now. It's going to start coming down. It went up too much. And it'll pull back, right, to a certain level. And it gets a new 52-week high. And it comes down, and the same thing continues to happen over and over and over. I mean, Shopify, it had a new 52-week high like every, for the last 2 weeks, I think like four different new 52-week highs. And so that lets you know it's not us. And then what you do, pull up the volume bars on those stocks, and you'll see it. You'll see money come pushing into that thing, right? Go on the weekly. And so that's what you're looking at if you're an individual stock picker and you want to be in stocks that Wall Street is pushing up, okay? That's kind of a key. And you don't have to have some crazy scanner and pay a lot of money to find those kind of stocks, okay? Now, when it comes to earnings, boatload tomorrow. right? Got all the banks reporting and Delta. So, this is going to be interesting. It'll be before the market opens. And so they got that. And of course, what's our economic data coming out tomorrow? Ooh, yay. Core PPI month over month, year over year. And the Fed loves to look at this one. Okay. And so buckle up, click for a lot of volatility. I mean, that's the name of the game so far in 2024. And with all that data coming out, if everything hits perfect, I guess, and the banks say everything's great and we're all good and consumers are great and PPI comes in where it's supposed to come out or under, and you could absolutely see it, skyrocket and go to heaven, right? That could happen. But, also you got weekly options expiration on top of that. And so there will be a lot of tomfoolery tomorrow. You can bet that. A lot of premium burning somehow, some way is going to happen tomorrow. So anyway, let me know how your day went, what you're doing tomorrow and everything, what you think about some of the movements we've had. And do you think, PPI, the rest of January is going to continue to trade sideways, be red, or do you think we're finally going to start to move up again? And do you see this continuation, this rotation continuing to go into mega caps and the IWM, small caps, regional banks, small tech, that kind of stuff struggling? Okay, and again, this earnings season is going to tell us a lot because there's so many zombie companies and companies on the IWM that ain't got no business being in business, to be honest with you. But still, I ain't seen a profit in a long time. But we'll see how it rolls. So anyway, have a good one, guys, and I'll see you tomorrow to close out the week.